One mega stock is about to reach a very special milestone and become the next member of the exclusive $1 trillion club, alongside the likes of Apple, Microsoft, Amazon, Alphabet, and Nvidia. However, what might be the secret to opening this valuable vault? AI, a two-letter game changer that is transforming our future, holds the key to the solution. As we set out on an exciting voyage into the heart of innovation with Tesla, viewers should fasten their seatbelts. Will Tesla's entry into this exclusive club be fueled by artificial intelligence? This is not just a narrative about self-driving vehicles or robots dreaming of electric sheep. Rather, it's a story of ambition, of economies that could become endless, and of a firm that has the ability to upend not just markets but also everyday existence. Are you prepared to see a revolutionary event? Are you ready for what could be a once-in-a-lifetime opportunity to invest? As we continue to explore this movie, please remember to hit the like and subscribe buttons and, of course, to slam the notification bell. Allow us to begin this video, and welcome to Tesla Stock News. We highlight the United States tonight as an unparalleled force in the world economy. American businesses have continuously set the bar, dominating international rivalry and demonstrating the strength of free market ideas. Go back to 1901, when United States Steel became the first billion-dollar company, a testament to the might of the Industrial Revolution. When the car industry was at its peak in the 1950s, General Motors was in the vanguard, being the first to reach a $10 billion value. As the momentum grew, General Electric became the first $100 billion behemoth in 1995 thanks to its wide range of products. In the era of the digital revolution, Apple broke beyond the trillion-dollar barrier in 2018 and reached previously unheard of heights thanks to the iPhone. Its valuation has already surpassed an astounding $3 trillion. Apple is part of an elite group that includes Microsoft, Amazon, Alphabet, Nvidia, and Apple. All have revenues above $1 trillion. These behemoths are not only setting the standard for global leadership, but they are also changing it. Let's now change our focus and discuss Tesla, a business that is negotiating the market's curves with the dexterity of a high-performance car. This innovator in electric car technology is about to re-enter the elite trillion-dollar club, a position it held for a brief period of time in 2021 and 2022. With its sights set on the future of artificial intelligence as well as electric automobiles, Tesla is moving quickly in the direction of major value creation. Let's analyze the most recent data from Tesla's fiscal quarter, which concludes on September 30, 2023. The stock may have initially been sold off as a result of investors applying the brakes, but this insider information explains why this decline may actually be a sign that long-term investing is about to get underway. Throughout the EV industry, Tesla has continuously been in the forefront thanks to its innovative production techniques and automobile technology. Compared to other manufacturers in the industry, this innovation generates a higher gross profit margin per vehicle, surpassing even those that are still competing with internal combustion engines. The corporation is experiencing some steep inclines despite its solid position. Consumer spending is being restrained in the current economic environment, which is characterized by rising interest rates and inflation. This is especially true for large purchases like new cars. In addition, the competition is intensifying as big automakers like Mercedes-Benz, General Motors, and Ford, together with niche EV startups, are vying for market share in the EV space. Tesla has made a calculated decision to lower the sticker price of its cars in order to negotiate these difficult circumstances. A new Tesla now costs, on average, 19.5% less than it did in August 2022, according to Cox Automotive. Tesla's competitive pricing power is derived from its impressive gross profit margin, which beats the industry average even after dropping from 25.1% to 17.9% in just 1 year. This delicate balancing act between cost-effectiveness and pricing agility highlights Tesla's proactive approach to managing market swings. At a time when consumer attention and environmental legislation are increasingly focused on electric vehicles, Tesla is not only defending its market position but actively expanding its reach by using its superior profit margins to offer more competitively priced automobiles. These price reductions seem to be boosting demand. Tesla delivered 43,500 vehicles in the third quarter. This is an impressive accomplishment, especially in light of the fact that it took place during scheduled production halts for equipment upgrades in China and Europe. Even though more automobiles are being produced, the decrease in pricing has affected the rise of automotive revenue, which increased by a meager 4.5%. Tesla's net income sharply declined by 43.6% due to pressure from price reductions, as reduced margins made it more difficult to pay operating expenses. However, there is a bright spot in this choppy financial outlook. Notwithstanding the challenges, Tesla hasn't slowed down its planned rate of production. The corporation is sticking to its plan to create 1.8 million cars this year and is continuing its aggressive effort to raise that figure by 50% a year in the upcoming year. While examining the erratic data regarding Tesla's most recent delivery figures, there's an important point that long-term investors should be aware of. Tesla is known for being a forerunner in technology, not simply for making automobiles. Imagine driving in the future now. According to Tesla's vision, automobiles will be able to drive themselves around on public roads thanks to advanced technology that is now being refined. According to CEO Elon Musk, this isn't simply an upgrade. Rather, it's a revolution driven by artificial intelligence and fed by more than 500 million miles of actual driving data. Musk predicts that by the end of the year, FSD might be prepared to go from beta to a full-scale rollout for the third quarter. Selling automobiles isn't the only thing at stake here. Subscriptions to a service with a potential 80% gross profit margin might revolutionize Tesla's business strategy. However, there's more. In Musk's ideal network, Tesla's self-driving cars would also function as ride-hailing services. Even while the typical car is only used for 12 hours a week, Tesla sees the remaining hours as a chance to employ these cars as robotaxis, which would bring in money for both owners and Tesla. This bold initiative has the potential to propel Tesla's gross profit margin from its current 17.9% to an astounding 70%. According to Musk, Tesla's profitable software ecosystem could support and grow the business's finances even if it were to sell its cars at break-even prices. This would enable the company to lower car prices in a way that its rivals would be unable to match. As previously shown, Tesla, a $760 billion company today, just needs a 32% jump in stock price to join the elite $1 trillion club. Let's examine the figures. Tesla's stock valuation is already expensive, with a price-to-earnings ratio of 64.3 based on $361 in earnings per share during the last 12 months. Furthermore, even while price reductions would affect profitability and raise the P/E ratio even further, the company's predicted 50% annual output growth might catapult it into trillion-dollar status in just a few years. A year, presuming that the P/E ratio and pricing remain constant. However, something much more revolutionary is on the horizon. Wall Street analysts are keeping a close eye on the emerging autonomous ride-hailing market, which is predicted to completely transform transportation costs. The reduction of expenses by the removal of the driver's pay. According to ARK Investment Management, this would result in an astounding $4 trillion in revenue by 2028, suggesting that Tesla's stock price might rise by 860% to $6.1 trillion by 2027. Elon Musk has emphasized that completely autonomous cars will be the driving force behind Tesla's expansion, citing the compelling economics to support this claim. In his ideal world, cars that are currently driven for just 10 to 12 hours a week may become 5 times more productive, turning Tesla into a hardware firm that makes software margins. Speaking on the advancements in autonomy and the fact that Tesla's FSD beta vehicles have accumulated over 500 million kilometers, Musk's joy is evident. He alludes to the revolutionary potential of Tesla's AI system, comparing it to baby AI that can understand the outside world and traverse it on its own. Elon Musk made a suggestion on a future in which autonomous technology is used outside of roads during Tesla's third quarter earnings call. He imagines a future in which completely autonomous humanoid robots and self-driving cars go hand in side, causing a profound change in the nature of the economy. If you have fully autonomous cars at scale and fully autonomous humanoid robots that are truly useful, the economic possibilities border on the infinite, Musk said. During the call, he went into further detail about the possibilities of these robots and showed how eliminating the constraints of human work might essentially result in endless economic growth. Musk is optimistic about Tesla because of the company's artificial intelligence (AI) software, which not only directs the movement of its autonomous cars, but also serves as the brains for their Optimus humanoid robots. According to Musk, these robots will eventually be able to manufacture themselves, establishing a self-sustaining cycle of production in addition to having the ability to learn tasks by simple observation. Musk is unwavering in his belief that Tesla has the upper hand in the humanoid robot market, even if other competitors like Boston Dynamics are also pursuing new avenues. He made a daring prediction about Tesla's place in the robotics hierarchy when he said, "I don't think anyone is going to do it better than Tesla by a long shot." As he has acknowledged in the past, is Elon Musk's ambitious projection for Tesla's future an accurate representation of an impending technological revolution, or is it based on an exaggerated sense of speed? The final arbiter will be time. When investors pressed Musk about the debut date of Tesla's robotaxi service during the Q3 earnings call, he declined to provide a precise schedule. There are other competitors in this groundbreaking contest for robot taxis besides Tesla, like General Motors Cruise and Alphabet's Waymo. It may be argued that General Motors, rather than Tesla, now provides a larger direct investment in the rapidly expanding robot taxi industry. According to Musk's forecasts, the future of Tesla's autonomous vehicles is strongly linked to the company's aspirations for humanoid robots. Any failures in one could indicate difficulties in the other. It's important to understand that Tesla's path to becoming the most valuable company in the world is not only determined by its initiatives. Other digital behemoths such as Apple, Microsoft, Alphabet, Amazon, and Nvidia, all already part of the exclusive $1 trillion club, are also feeling the breeze of artificial intelligence. Even if Tesla succeeds in its endeavors, it will still lag behind these sector giants. However, ignoring Musk's vision would mean ignoring AI's potential to radically transform our world. Similar to Musk, artificial intelligence has the potential to drastically alter the game. Musk's prediction may come true at some point if Tesla moves forward with its AI-driven goals. This is still a very real possibility. It still needs to be seen if Tesla will reinvent technology or if it will adopt its competitors' creative strategies. Time will tell. After delving deeply into Tesla's ambitious journey, we are left wondering how AI can revolutionize the automobile industry and beyond. With completely autonomous cars and robots, Elon Musk's vision for Tesla promises a radical change in how humans engage with technology and the outside world. But there are still a few unanswered questions. Can Tesla fulfill its driverless promises while navigating the competitive winds? Will the company's AI breakthroughs enable it to join the existing tech heavyweights in the trillion-dollar valuation club? More significantly, is Musk's optimism a sign of prescience or an illusion of arrogance? Participate in the discussion and share your thoughts in the space provided for comments below. Remember to subscribe to Tesla Stock News and press the like button as well. We appreciate your time and hope to see you in our upcoming videos.